Ladies and gentlemen, Tesla stock was up almost 10% yesterday. The breakout has started, and I think it's going to continue because I do believe we are at the precipice of seeing a delay of China tariffs. That means, well, there's not really any tariffs after that point, right? China's the only country that has these extreme tariffs, and if we're going to negotiate, that's like step one in my view, is to give China a pause. Of course, you'll probably keep the 20% fentanyl tariff, same with Canada, Mexico, that has stayed in effect. Now, we will go over that here in this video. We've talked about that quite a lot on this channel. I expect that news will come out sometime this weekend or in the early part of next week. Now, Tesla just did something that is questionable for some people. They raised prices because of tariffs. Now, I think this is good, and I will explain why this is here in this video. It's good for the demand story. It's good for profitability. Okay, but there could be a trade-off here. We'll talk about it in this video. Overall, I think it's a net positive. We do have other Tesla stock news to get into, the option activity, short interest, what's going on there. I want to dive into that. Look at Google Trends data, all kinds of stuff. So ladies and gentlemen, hit that like button, subscribe to the channel if you have not done so already. Let's keep this one short, sweet, straight to the point so you can get on with your day and enjoy your Saturday. Ladies and gentlemen, let's go ahead and get started. Now, first things first, before we get into everything else, I talked about this in the prior video, but essentially getting above that 270 level yesterday was critical. It's the first time you've been above the 50-day moving average in any kind of bullish way, okay? Last time you were above this was January 31st, 2025. So from a technical perspective, this is a shift. And it does seem like once you hit that 270 level, you started to get increased volume that, came into the stock, okay? Volume kind of peaked out right as you broke above 270. It was the biggest 30-minute candle of volume, and then volume just stayed strong throughout the day and into the last 30 minutes or so, hour of the trading day, volume was exceptionally high. Okay, that's a great sign from a technical perspective. Now, we are bumping up into that 291 level. That is your 200-day moving average. That's another big level. We have not been above this since back here on March 4th. So it's been almost 2 months now since you've been even above your 200-day moving average. If you get above that, then you start to talk much higher levels like, the 330s, 340s. So from a technical perspective, if you are a bull, you have to love what you've seen on Friday. Typically, a breakout of the 50-day moving average leads to larger breakouts, okay? Like back here, September of 2024, you broke the 50-day moving average, you rallied 17%. After the election, you gapped up above that 50-day moving average, and, well, you rallied well over 100%, okay? That was that post-election rally. And now there's good reason to be rallying again. Following yesterday's news that the NHTSA is going to relax rules for robotaxi deployment. Here you can see rule changes announced by the Trump administration this week could allow automakers to report fewer crashes involving self-driving cars, with Tesla potentially emerging as the main beneficiary. Quote, the Transportation Department announced that it will no longer require automakers to report certain kinds of non-fatal crashes, but the exemption will apply only to partial self-driving vehicles using so-called level 2 systems, the kind that Tesla deploys. Now, this is part of why Tesla did so well on Friday, but I think it's a little bit deeper than that, okay? It was really like a lot of your Chinese names did well, if I recall right. I think, and I really think that's because a deal, or at least a pause of tariffs, is coming, okay? I think people are kind of getting ahead of that and positioning for that. Okay, yeah, like all of your Chinese names did pretty well. Tesla, big beneficiary. Again, the news that we just shared was obviously important on Friday. We just came off of earnings that were not great, but the commentary was definitely better than expected. And you have this, what I think is imminent pause of tariffs on China, which Tesla stands to benefit probably the most here from a brand perspective, at least, right? If people are gonna, revolt against American companies, like Tesla does like the largest chunk of Tesla's business is in China. That would be a colossal problem. So it would really de-risk the Tesla growth story from a vehicle perspective, getting a deal done with China. So those are the reasons why I think Tesla is up 10%. And I do think, again, as long as we get that pause on tariffs, this will continue. Now, we do have a new opinion piece from usatoday.com that says, from columnist Ingrid Jacques, that says, Musk risked Tesla's health to help our country. We should thank him, not hate him. Elon Musk, at great personal and professional cost, has devoted his time to finding ways to cut through the bureaucracy and downsize government where it makes sense. This is not a kind of article you see all the time. Now to the big news of the day today. Tesla has increased new Model Y pricing in Canada by up to 21% due to the tariff situation with the US. Model 3 prices have increased by 15%. Inventory pricing hasn't changed in Canada due to those cars already being in the country. And now on Tesla's website, you can see explore pre-tariff priced inventory while supplies last. Okay. A new Model 3 now starts at $57,000 in Canada. Now, there is a trade-off here. Okay, let me explain this. The trade-off is, sure, at a higher price point, there's going to be less demand. Okay. There's a term called demand destruction. Okay. If eggs are, this is a great example, $9 a carton versus $2 a carton, you're probably going to buy less eggs if they're $9. Okay. The trade-off is, if you are the egg farmer, even if you sell less cartons, you're probably going to make more to your bottom line if eggs are $9 a piece, right? If you're raising chickens and selling them for $9, obviously, versus $2, okay? But you're going to sell less of them. That's the situation with Tesla, okay? How much of the price increase is just covering the tariff cost, or how much of that is a little bit extra? Tesla's seeing what they can get away with. I don't know. I would imagine that there's a little extra there, okay? But nonetheless, this is Tesla prioritizing profitability, okay? This is not a situation where it sounds like Tesla's seeing a demand problem right now. Now, if Tesla's demand does slow down, they will probably lower prices again, okay? We know that. But as of now, this looks good from a demand perspective, and it looks like Tesla's trying to protect profitability. Unfortunately, in the short term, that's all Wall Street cares about, is profitability. Now, longer term, they care about growth. The reason, Tesla did well after earnings, even though earnings were bad and profitability was bad, blah, 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 the numbers were bad. A lot of other stocks would have been down, but Tesla was already down 50% from all-time highs. Like, let's not be confused. With the same earnings that we got, if Tesla was $400+ per share, Tesla stock would have fallen probably 10%. Okay. It was just already priced for bad news. So this is kind of like Apple. Okay. Apple hasn't really grown much in the prior couple of years, the last 4 or 5 years. It's not a growth stock. Let's be honest. But Apple, they don't cut prices. They just let demand be what it is. And they protect profitability. And that's why that stock has, or was at least, doing well for the past couple of years, even though they really don't grow. So, yep, there's a trade-off here, but protecting profitability should be seen as a positive sign. And maybe it does put a little bit more pressure on the administration. Like, hey, if Tesla has to raise prices, imagine Ford, GM, other companies. They're completely screwed if these tariffs actually go into effect. Now, Tesla is offering select brand new 2024 Model 3 Performance inventory cars for just $41,490 with a 10% off discount, 0% APR, and free FSD transfer. And Tesla has created a new X account for the Tesla Semi, which means we're probably going to start seeing more details about the Semi, and Tesla is targeting $8 to $10 billion worth of revenue per year from this. So it's not nothing. It's like 10% of Tesla's total revenue on the high side. Now, in option activity yesterday, it was very positive. You had 414 different orders totaling $571.5 million with a positive order value of 81%. So people were definitely getting some bullish exposure to Tesla. That's fantastic. Okay. Option activity is always forward looking. It's never backwards looking. Just kind of like short positions. Somebody could put on a short position and then, well, get blown up and still hold that short position, right? And that's kind of reflective of prior views, right? At that point, option activity, especially on a day-by-day basis, is only reflective of future expectations. So 81% positive order value, that's a great sign that people are turning more bullish on Tesla. And after the 10% rally on Friday, it's hard to not be at least a little bit more bullish on Tesla to reconsider looking at that stock again. Now, Tesla's short interest off free float sitting at 2.72%. You got about $20 billion sold short in Tesla. 76.34 million shares that are currently sold short. And it does look like about 300,000 shares were covered on Friday. So quite a bit of, shorts getting out of short positions. That's about 2.5 million shares over the last 2 trading days. So there's definitely some folks that do not want to be short in Tesla anymore. If we take a look at the Google Trends data worldwide for Tesla, things are starting to pick up again. It's starting to get nicer out. Yesterday was almost 80 degrees here in Michigan. So I didn't look at other places in the country, but I imagine it's starting to get nice in other places as well if Michigan's starting to get nice. So you are starting to see interest in buying a new vehicle curling upwards. It seems like it stayed cold forever this spring. But things are starting to move in the right direction, especially for the Model Y. The Model Y jumped from 18 to 20. The Cybertruck actually fell from 15 to 14. The Model 3 is staying at 15, Model S at 7, Model X at 5. Those are unchanged. So specifically for the Model Y, starting to see an uptick in search trend activity if we look specifically at the United States. Same's kind of true here, but really just overall pretty stable levels. Cybertruck at 12, Model Y at 13, Model 3 at 11, Model S at 6, and the Model X at 4. Inventory numbers for Tesla are, well, collapsing again, which is a great sign that demand is good. Model Y, 742 vehicles in inventory. That's the lowest we've ever seen since it launched. The Model S at 1,500, Model X at about 2,700, Cybertruck at about 3,000, and the Model 3 at 4,100. Now, U.S. Treasury Secretary Bessent says he is encouraged by talks with South Korean officials focused on expanded equilibrium for trade. And he says that Korea talks aimed at encouraging rather than restricting of trade. Now, it was also in the news on Friday that a Japan trade deal is coming soon. That was, again, part of the reason why markets went higher, but I think at this point, it's really all about China. And I think the reason, we've been green 4 days in a row on the S&P. Like, besides Monday, every other day was positive. Tuesday up 2.6%, Wednesday up 1.55%, Thursday up 2.1%, and Friday up 0.72%, another 0.11% positive in after hours. I don't think that's happening because of a Japan deal or a Korea deal. I think that's happening because people are front running a China pause on tariffs. I think it's literally as simple as that. I think during these kind of market environments, you want to follow the money. We were starting to trend lower to the lows. All of a sudden, the last 4 days, we've recovered. to now the highest point you've been at since the delay on tariffs for all other countries. You're back to your 300-day moving average. In fact, the S&P is at $551.23, 300-day moving average at $551.63. So you're just a couple cents away from breaking above that moving average. A break above that is going to probably send you to maybe your 100-day moving average at 578. But hey, I'm not a financial advisor, I'm not a financial planner. Come to your own conclusions. It just feels like people are front-running a China tariff pause at this point. And the news on Friday as well, China exempted certain U.S. goods, including some pharmaceuticals, from 125% retaliatory tariffs it had imposed after Trump slapped 145% duties on Chinese imports. That was some of the good news on Friday again. It sounds like we're making progress towards good news with China instead of where we've been for the past couple of weeks, just things getting worse with China. And the White House has confirmed a meeting between Trump and Zelensky. Now, also in the news today, Bill Ackman says that China and the U.S. are incentivized to take the tariffs down to more reasonable levels, say 10 to 20% as quickly as possible. Now, first you're going to get a pause on tariffs, but then you could see 10 to 20%. Okay, 20% probably like Canada and Mexico. Just keep the fentanyl tariffs in effect. That's probably the direction that we're headed. And 10, 20% tariff following 145% will be seen as exceptionally good news. And I think at that point, people can start to invest again. I think people can start to kind of game out how these tariffs may affect the economy. That's the real question. How much damage is done in the economy? And it's hard to know that at this exact moment. And that's why the markets are still down 10% or so from all-time highs instead of, in the mid 600s right now. Because let's face it, earnings have come in pretty good so far. Here in this next upcoming week is going to be the real test. This is going to be the heart of earnings season right here. On Monday, you have Domino's, MGM, Opera, a couple other names in pre-market. In after hours, you have Waste Management, NXP, F5, Teradyne, Transocean, Nucor, Welltower, and Cadence. Tuesday pre-market, SoFi, PayPal, UPS, JetBlue, Coca-Cola, Pfizer, Royal Caribbean, Spotify, and Altria. Tuesday and after hours, you have Visa, Snapchat, Starbucks, First Solar, PPG, Booking Holdings. Wednesday pre-market, Humana, Caterpillar, Western Digital, Generac, GeneX, ADP, and GE Healthcare. Wednesday and after hours, you have Microsoft, Meta, Robinhood, Qualcomm, Albemarle, some others. Thursday pre-market, Eli Lilly, Roblox, CVS Health, MasterCard, SiriusXM, McDonald's, Shake Shack, and Builders First Source. Thursday and after hours, Amazon, Apple, Riot, Airbnb, Reddit, Big Bear AI, Atlassian, Five9, and some others. And then Friday pre-market, you have Fubo, ExxonMobil, and Chevron, Wendy's, Cigna, Apollo, Magna, and some others. And really, I think this earnings season, it all boils down to Apple and Amazon. What do they say about consumer demand? What do they say about inflation or prices rising? What's their view on how that's going to affect margins and the economy? If Amazon and Apple say things are okay, we're getting through this, then I think people are just going to be a lot more confident in general about what's going on out there in the economy, what the expectation is for prices to rise. So let me know what you guys think about all of this down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.